What is up, everyone? Hello, hello. Hey, Dan. Thank you for tuning in, my friend. Welcome, guys. Let me know if the audio is good. It is November 22nd. There's a second live that we've done here. Yesterday, we broke down the footprint, right? We had a solid breakdown of the footprint, and we went through the footprint. I said footprint like 6 times. Hey Jim, how's it going? Today what we're going to be doing is actually breaking down the DOM, right, the depth of market, and going through an analysis, understanding of what it is that I look at on the DOM, right, how I look at these things on the DOM, where to look at these things, right, some of the key important factors, and how to forward your reading of the DOM, right? Hello, Edward. Thanks for the audio update. Tradegator, Declan. Hope you're all doing well. Let's begin this, right? Let's break this down a little more, because this right here, as you all might know, this is the DOM, right? This is my Sierra setup. My Sierra setup, right? What am I doing here? My Sierra setup has very limited things on the front face of it, right? We have a DOM, which is a majority of it. I got 2 screens. We got this 12-tick chart here that doesn't really do much, right? Realistically, it's a nice visual where I can draw my levels when price is trading in them. I know kind of where we stand. And then a nice piece of information over here. This is my volume profile chart, right? So the DOM is going to be the centerpiece of what we're talking about today. Hello, everyone. Hope you're all doing well. Everyone that's joining in now. We're breaking down the DOM today. We're gonna talk about the DOM, but before we talk about the DOM, right, I want you guys to know that it is holiday weekend, Thanksgiving. I hope everyone has an amazing Thanksgiving, an amazing long weekend. Today, this whole week has been generally tougher to trade, lower volume, more sideways, choppy movement. The goal of this week was not to lose your ass in the market. So if you came out slightly green, slightly red, just not destroyed, or very well in the green, you've done very well, right? A lot of people take these weeks off. There's very limited volume. If these weeks come around, right, in the future, now you know. Thursday, tomorrow, and Friday, markets are closed. Speaking of Friday, we have Black Friday that comes out this Friday, right? We have that Black Friday offer that's in the description down below. It's 78% off of the first month at Trade Pro Academy, where you gain access to our free psychology. Well, not free. You gain access to our psychology course. It's going to be recorded live in the first week of December, and much, much more. So keep that in mind. Now let's dive into this DOM, this depth of market. The depth of market has multiple different facets to it, right? As I've talked about this before, there's a difference. The main difference that people have to understand between the depth of market is a difference between passive and active orders. Passive and active orders are what traders mainly look at. Now, I personally think, right, I know a lot of people look at this way, but generally speaking, looking at the active orders is the incorrect way of reading the DOM, or I should say the less effective way of reading the DOM, right? You don't get that much effectiveness reading passive orders. Why is this what's going on? Passive orders are orders that rest on the DOM, these limit areas. So what this suggests in these limit areas is people are just like waiting around. When you click on the passive order DOM, you just wait in line, right, for the buy side or the sell side. This doesn't influence the actual movement of the market. The movement of the market is influenced by active orders, which are market orders, right? Market orders can be found in the middle columns. So the red side close to the bids is a market sell. The right side close to the offers in blue is a market buy. One of the main reasons that people actually look at the footprint is because they can see the market orders, the reactive orders on the footprint, because those are actual market orders. Generally on the DOM, if you don't have the middle columns, the 2 market order columns, you're generally looking at passive orders, so you need some kind of supplement to help you out, figure out where the active orders actually sit, right? So when we talk about these active orders, my eyes are glued to the active orders. I want to see how these active orders are trading, because that's the importance of the market movement. Now, active orders, there's 2 ways to read and identify them, and I think that it's a more difficult task to do, right? It's a more difficult task to, I guess, get proficient in, if you will, because a lot can happen, right? So let me break this down. Let me explain what I'm talking about. The two active order columns in the middle, they are based, right? You will see strength in the move based on reactivity and speed. So what does that mean? We generally look at larger market orders that come in. You have to have a timeout in milliseconds, right? Generally 2,500, because if you don't have a timeout in these middle columns, every time they trade a new tick is just going to start from 1. So if you stall them out for 2.5 seconds, they allow for the orders to actually fill in there, so you actually get normal quantities. The way I see it is that you want large orders, right? Large orders that come in that are presented by the market that have directionality in the market. What does that mean? So large orders on the S&P 500 futures, I consider anything that starts above 200 on the market order front. And it's not just like, for example, let's say you get 200 market sellers that come in right now in market. That doesn't mean, okay, start shorting. That doesn't mean if you get 600, 700, 800, 900, 1,000, 2,000 market sellers, you start shorting aggressively. That's not how it works, right? These are important factors when they're very large orders like this, right? 244, 250. But remember, markets move based on reactivity, based on speed. So I compare the market orders that trade on the buy side and the market sell side, right? Number one, the size of them. Number two, who holds the reaction and with what speed. So how does this work? Generally speaking, let's say I'm looking to sell into an area, or let's say I'm looking to buy. Let's say I'm looking to buy into an area. This area looks pretty good for the volume, for the buyers, right? What would I want to see? Now, number one that everyone has to understand is that the only way markets go up is if there's real buyers that are stepping in. The only way markets go down is if there are real sellers stepping in. So in this case, if I want to buy, I have to see real buyers. What does a real buyer tell us? A real buyer is on the market buy side, on the bid side, or on the blue side here, I should say. And they're first large quantities, right? You have 200, 300, 400, right? 500. And, right, the next part is that they react against whatever big sellers are coming in with an up move. So when you get upticks in constant buying, let's say someone buys 500 here and it moves up 4 or 5 ticks. Great. Right? You want to see that done with speed. What am I talking about speed? Instantaneous movement so quick that you're like, whoa, shit, what the hell just happened? Right? So that's a key for the buyers. If I look at current price right now and I say first, like, let's just say we're trying to buy, right? We're just assuming that we want to buy. If I'm looking at this and I'm thinking, well, I want to buy it, but no one's really buying, right? So why would I want to step into a market that doesn't have heavy buyers if I'm going to throw in 3 lots anyways, right? It just doesn't make that much sense. So I can get my areas from my volume profiles and delta. We'll talk about delta, the second piece of the puzzle on this DOM itself. But reactivity is very, very important. There's another concept where buyers can come in and you can get a reversal. These are where traders actually get trapped on the short side or absorbed. So this is the idea where large market sellers on the red columns trade, right, quantities 3, 4, 5, 1,000, right, very, very large quantities, and they can't push prices lower or get the reaction that they want. Because generally speaking, when you see a big sell, let's say 600 go in on the offer, generally speaking, that's a big order, right? You expect to see some kind of quality strength to the downside on a large downtick with speed. If that doesn't happen, a lot of people, they start looking at this as absorption, as traders getting trapped, right? And if price doesn't move anywhere, they're like, oh shit, they're getting absorbed, right? That's it, it's going to reverse. A lot of people make a mistake with this because they don't wait for the actual reactive buyers. Again, you need buyers to be long. Sellers can keep selling into lows and just trickle prices lower and lower and lower and lower. There's no buyers to actually get them stuck, and there's no buy signal there. It's a mistake that a lot of people make, right? So if you're looking for absorption or just general market reactivity, you have to understand how the buyers and sellers react with one another. It's a very, very pivotal aspect to understanding this depth of market. Now, the second most key component that I look at on the depth of market is going to be delta, right? Delta is spread out all the way across this DOM here in the red and blue histogram, right? Left side histogram here, red and blue. So naturally, red is going to be negative delta, suggesting that the market sellers are greater than the market buyers at that area by X amount. Then the buy delta is going to be the market buyers greater than the market sellers by X amount in that area. So a delta, large delta, if you're looking at the S&P, I consider large delta over 1,000, right? Large delta is over 1,000 in essence, and it means different things, right? It means different things. It can help you understand where people are getting absorbed, where people are strong in the market, right? Where people are trapped, blah, 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 all this stuff. So let's break down the delta. If I have large clusters of delta, that's great, right? It doesn't really matter to me where they're buy clusters or sell clusters, but I have delta here that's fairly large at 64 quarter all the way up to like 66 quarter, right? Very large deltas, over 800, over 900, multiple blocks. If I generally have a delta, a very large negative delta, and we're above that price, that's suggestive that sellers got absorbed and they got trapped in that area. If we're below the price of this large negative delta, that suggests that the sellers are strong and they want to continue the trend to the downside. When I look at this very large negative delta, and I'm coming into it, whether it's from above or below, I can look at the other side as stop hunts or a continued move that expands further. So as we were dropping from 74, 75, we were down like 10, 9 handles right now. We're coming into the cluster of these larger deltas. You can see you had clusters of deltas before, but this is the next big delta before we come down into the 58s, right? You got a 6-point move ahead of you. If we can get a nice offer through this area, right, you're going to get that quick move through because those stops are going to get eaten. The sellers are going to come in pretty aggressively, right? So it's something that you have to understand in that from that basis. Now, looking at this, we said, okay, maybe we were looking to buy something into like the 66 or whatever, 67s. And I said, well, no one's buying this, right? No one's buying this. They're just constant selling. So if anything, right, we've avoided a loss on the buy. When I see the deltas that are clustered and they're this large, I look at them as areas of interest to trade, right? Not only do I have areas of interest based on my levels that are broken down in terms of the TPOs and whatnot, but I have levels of interest based on the deltas, right, that have clustered really aggressively, especially the ones that are around those key volume profile areas, right? So if I look down into this, I can see, okay, there's a nice, very big positive delta at 58.5. Now, this SOB here that happened, that traded in the morning session, right, this is what was getting me long. So not only were there aggressive buyers, right, shaping up at 58s, but these guys printed a very fat delta that were holding up like very strong reactions. So I started buying, but we dropped all the way down into 55s where you can see here on the market buy side, I don't know if you can see it, but take my word for it, you have 867 sellers, market sellers, 55.5, right? Beside them, you have 540, 550, 220 above. So this area, big sellers came in to dump into the low, and these buyers, right, 1,300 plus buyers at about 3 ticks, propped up the whole market and helped us push past these larger positive deltas, creating that buy side press, right? So right now, I'm not necessarily in an area that I'm super interested in, so I'm going to stay out of this, but it's still important. Well, it's still pretty cool to watch the DOM and see how it reacts, because I'm looking at these areas and we've already kind of pulled down from the buy side. We're kind of in a mixed sideways territory. If anything, the sellers are a little overwhelming because we've had multiple tests and failures of the 70-69 where offers came in multiple times. So as I look at this, sorry, my monitor was about to turn off. If I look at this, right, the way I see this is that we're in no man's land from a structural context perspective, and the depth of market isn't really breathing too much life into this market because, number one, it's a low volume day. It's not like you're not getting that many big orders that are stepping in right now, especially at this hour, lunch hour on a long weekend day. But it's good to watch how these guys come in and see who's kind of in control. The depth of market, the DOM, can also give you indication of who's in control of the market, meaning the bull side or the bear side, giving you sentiment briefings of the market. So if it's very difficult for the bulls to come in and they throw so many contracts, massive size, but every time they pop, the sellers absorb them and dump them, you have more of a bearish DOM on your hands, right? So even though we're up today, right? Well, actually, from the open, we're about where the open opened, but we're up from the most recent lows. Even though that's the case, I wouldn't consider this a very bullish day because the buyers, they've struggled very, very heavily. Even though you get a run up like 20-ish points from the lows, it takes hours. It took about like 20 minutes for the sellers to dump it about half of that range. So I'm sticking a little more to the sell side. As you can see the depth of market here, the larger orders are on the sell that continuously try to offer lower and lower and lower, right? So let's see how this kind of shapes up if we get into any areas that we're interested in. Otherwise, if you guys have questions about this, this will be great as we monitor and watch this. Should I switch to ES completely? Thanks. Well, it's a multi-layered question. What do you trade now? Do you have success with the product you're trading, right? Why and why not? ES, in my opinion, is an easier market to trade, especially for newer traders. Out of the futures markets, I think is the easiest one to grasp, especially on an order flow perspective, and it's the most liquid equity market. What monitor size am I using? I don't know, 27 maybe inches. Can I show my fills today? Yeah, you're gonna be impressed. Look at this baby. So I took the break. I'd only got filled on one, didn't take profit, took a stop, bought aggressively, right? I was chasing price a little, where I saw those guys actually bid up. Kind of shitty. Filled a little aggressively before literally getting on the low tick, and then I had like a few running this long move. I got it on the pullback, and then now we're green, a few pennies on the day. So not the best trading because I wasn't necessarily waiting for my areas, right? I had this mid 50 marked off. That should have been realistically my only trade, but yeah. It was more of like not following the plan, but right, it's an emotional aspect where we can all be prone to these mistakes. So I'm up like about like 25, no, about like 35 handles on the day, but yeah. Do you view DOM blocks support resistance or magnets? Rasmus, if they're on the passive limit side, no. I don't view them as anything. Unless they're very, very close, right? So let's say, for example, okay, good question. This is how I view limits, right? Passive orders, limits, meaning a resting order is sitting over here. So I view them as when they come. Okay, so for example, let's say markets are trying to bid, right? If someone comes up like randomly over here at 62 and they throw in 250 contracts, this suggests that they're trying to chase price. So this is a little more of a bullish notion, right? So they're trying to chase, they're acting as a little more bullish guide. But this only if they appear. Now, another thing is if price is close and it's close to a big block of 600 and they trade them, then I care. Right? Because then they trade at market, and then I get a better idea of what's going on. But if it's like 600 sitting up here like 50 points away, then it's not for me, right? How often do you clear the market orders during the day? Good question, Greg. I don't really do it that much, to be honest with you. I don't, no. I think that it's effective when you're looking for a trade entry in an area, but I only clear them if I'm like reviewing or replaying, which is right maybe a little counterintuitive. There was a few weeks ago, someone says, Huck says, there was a 600 lot order limit resting. They filled them. Any reason why they didn't run? Well, they probably wanted to get filled, right? Maybe they didn't want an iceberg. I don't know, right? I don't know, they wanted to get filled is the best answer I can give you. If I have to take a trade now, can you go through the process, take a trade long, short? What will my target be? What is the DOM exactly telling me? Yeah, I can, right? Generally speaking, I wouldn't take a trade right now, right? It's in an area where I'm not too confident in the movement, right? The DOM, the thing with the DOM is, right? Sometimes when there's low volatility or I should say, it's a bad choice of words. When the markets are more erratic, which is very rare realistically, it's a little harder to get a read on the DOM, and especially around like times of slower market movement, which are generally around lunchtime. I don't really love trading at all. But if I'm looking at this DOM, it's not really telling me anything specific in terms of directionality. It's whatever. So if I had to take a trade right now, I'd probably take no trade at all. It's just I can't come up with anything to show you or help you right now to understand this depth of market any better. Now, the analysis that I would do is that we tried to move above this larger block around the 70, right? 68 to 70 had a block. Let me just move this. 68 to 70 had a block, and we traded above it just a head fake and reoffer back below. So generally speaking, if I look at this, we have nice delta clusters of traders that got trapped at 69.5, some sellers at 68.5, right? So in this area, this you can see larger offers came through this area. So if I would have to do something, I'd probably wait to see if we can reoffer that higher 60, low 70 again, right, to continue this short. Because we're accepting back into an area that has traded a lot of volume throughout the day. You can see we barely spent any time above 70. The 2 times we traded above it, the majority of the time is spent in and around that 60. So generally speaking, right, you're printing an unfair value above that 70. So as long as we continue to offer below it, I would expect that you'd see a little more downside pressure in the market, right? Do you front run big orders on the book? No, so the big orders on the book, like I don't really care about them. They're not that important unless they trade, right? This is the thing about passive orders, right? I don't want to front run anyone because like think of it this way. If I'm trading 3-4 lots on the minis, what does it matter if I front run anyone, right? Because the thing is, someone trading like hundreds and hundreds of lots, like you're insignificant in comparison. I don't know if they trade those 300 lots, right? Are they getting in and out, or are they spoofing? What is the situation until I see the actual reaction of the trade? Does Dom show any indication who are long-term traders? Those are more rare, but you'll see them at the beginning or the ends of sessions where they just have a massive, massive imbalance of delta. This happened, I want to say either last week or a few days ago, where there was like, I think it was like negative 16,000 delta at a high, and everyone was like, holy shit, what does this mean? Oh, at 69. At 69 right before we failed. Was that 69? I want to say 69. I could be bullshitting. But so when you have that like very, very large, big order that goes market, right? Large negative imbalance at that 69, it was like 16, 17,000 negative delta. Those into the close, right? Those are generally long-term positionings in the market, right? Someone getting in or offloading contracts. It shouldn't necessarily be taken that crazy into consideration for a move. If there's large contracts that trade into the last half an hour of the day, those are typically what we would call longer term positions. You can see right now, if I were to take a position, I'm pretty screwed because the market's not really doing anything and the DOM's kind of just dancing around. Let me know if you have any questions here. Sorry, I guess I can't see this. Oh my god, my face is in this. If a big limit order on the DOM trades, do you look at the speed, how it behaves, or what direction decision can you take from that? Yeah, generally speaking, you look at the reactivity and the speed of it, right? Because these big orders, when they trade, the thing is, if there's a strong direction, like let's say we're going up aggressively, and we trade a large market seller, right? And price just steamrolls over it, right? Those are just like positionings that are probably getting out. So these big orders, it is very reactive realistically, and the speed at which it comes in. Because I'm not here to assume or predict any movement based on orders that are passively waiting there. I need to see how the market tells me to react, because that past, like if you look at levels and you remember on the DOM, past sellers or past buyers, those are areas that you can assume new buyers and new sellers are coming in again, right? Those are the only areas that I look to assume. I don't look to assume based on resting orders that have been there for like who knows how long, right? It's not a valuable use of time in my opinion. I know some people combine DOM with time and sales. Do you think that it could be useful for the kind of addition to the DOM to confirm? Yeah, you can. So with time and sales, you probably have to filter it. So it gives you some kind of like market order filter. I think it can be useful. Right? Everyone has their own tools. I personally don't really get information that I don't see from the time and sales on the DOM, right? I get all my information there. I can see how these orders are going in market, buying, selling. Time and sales, right? It can have an addition, right? Those big sweeps that come in, large market orders that sweep, right? Stuff like that. So yeah, it can be a good tool. No problemo. Looking at my DOM now, my traded orders show a lot smaller than yours. Yeah, so there is a timeout setting, right? My orders, sometimes I change them, right, based on the speed at which the market moves. It's not that big of a deal when you change them, because you're still going to get the same reactions and same general sizing, large or small. So I would say that 25 seconds, or that's wrong. 2,500 milliseconds or 3,000 milliseconds, right? The timeout on Sierra chart would be useful to change it to. Do you sometimes enter trades at levels without DOM support? No, not really, Dwayne, because it's, like I can, but then I have to have a super wide stop and just like layer in, right? You can, but again, you'd have to be working with like a 6-8 point stop and just layer in and pray. Like I think the confirmation of the DOM helps you be a little more specific, right? Order flow in general, but you can trade without the DOM. You can just trade massive areas based on distribution theory, right? And have a wider stop. It is possible. How do you identify support resistance based on delta on the DOM? Large deltas, right, that have large inflection points can be seen as future support resistances on the depth of market, right? For example, yesterday, I believe it was like in and around that like mid 50, there was something of the case. Yesterday in the morning session, we had a large negative delta at 38. What happened? Bounced right off it, even off that NVIDIA news, sorry. So I look at areas that have massive deltas that actually act as large inflection points, and as they shape up throughout the day, right? If they're not sandwiched with like all these like massive deltas and they're spread out further apart, I take those more into consideration because they're more individualistic and they allow for us to see that they've actually created some kind of large inflection. Hello, Dwayne Edmonton. Like right now, this DOM hasn't really done much. It's kind of bit off that 63. Nothing impressive. We've seen like large orders here in the 300s at 67 3/4, but they should have already created some kind of more upside trajectory by now. We're getting into a period where prices are kind of stalling out. We're in a block of just like clusters and clusters of all this positive and negative delta that's been built up. So it's not ideal to be trading in and around areas like these and pivots. And point of controls, POCs. What Sierra chart package do you use? I think the highest one. I don't know. 12? 11? I think the highest one. Or no, 11. 11. I remember there was something wrong with 12. 11. How do you find trap traders on the DOM? Do you avoid the high volume nodes on the DOM volume profile? I wouldn't say I avoid the high volume nodes, right? Generally speaking, the high volume nodes, they don't come in contact with the level that I care about anyways. You can see like the low volume drop off here on the volume profile and the depth of market at 70. Trap traders on the DOM are absorption, right? It happens when large market orders trade on either side. So for example, at the lows, like these are trap traders, 867 trade all at once down at 55.5, right? They can or cannot create a large negative delta, right? If they do, that's great. If they don't, that it doesn't make them less trapped. But they trade at market large orders, and what happens is you have to get a nice strong bid that actually helps price react to the upside. In this case, multiple 500s for them to be trapped. Same thing on the buy side. I don't know if anyone got trapped on the buy side recently. I wasn't really looking at this. They did around 80. I didn't get that trapped. You know, if you have any more questions, this has been pretty eventful, but I do want to wrap it up because they're not really doing much right now. They're still they're trying to offer into that 68, right where we were talking about if we had to make a trade where all these large deltas get clustered and the volume starts to drop off. There's a little bit of an offer. It's nothing insane, but they're trying. Sometimes I in the Discord, are there recordings of previous trading sessions? All the recordings of the previous trading sessions are on the website, actually, so they're not in Discord. But I do reviews and replays, not every single day, right? I'll do write-up recaps most days, but I'll do replays and reviews of trades fairly consistently that are posted on the website as well, actually. So we have a huge DOM library, about like maybe 40 videos explaining different well, not all different topics, just trades, topics, trades taken, right? Reviewing some of the moves on the DOM, so on and so forth. I'm going to be doing more recaps for this smaller account that I'm trading right now. Is there any meaning behind the high positive negative? When they're clustered like that, right, those are like large imbalances that are just like stuck together in a specific area. I don't really love them because they create all this clustering that has like indecision. It's just an area that price expected to chop around. I like the larger deltas that are like further away from one another, or if they're at a concrete cluster, if it's like a point or 2 points of difference. Do you trade the open, or do you prefer to wait a while to turn? Yeah, like, well, define the open, right? I don't trade like the second the market opens. I don't have much of an edge at that point, right? I like to wait about 10, 15 minutes realistically. 1 second. What do you look for in aggressive rebids, reoffers, direction-wise? Like, if a bid comes in and there are, like, multiple hundreds on the bid, like, I would look for, like, a, like, 5-7 tick move in the direction with speed. If it comes back down into it, I just want to see them keep, like, pinging it off, buying it, right, to prop it up. Like, if it one touches bounces, obviously that means that there's a pretty strong bid there, but it's not that favorable because they just start running it without me. It's U.S. Thanksgiving. I'm not doing anything. I'm actually going to Spain tomorrow with my little cousin for the weekend. Or she's coming with me, I should say. But yeah. Do I bet in on pops? I'm not exactly sure what that means. If you could explain that, I'll answer. But generally speaking, right, if you want to learn the DOM, get more proficiency in it, I highly suggest the replay feature on the Sierra charts, because the replay feature allows you to identify, like, for example, right, I look at these areas and I see a massive drop, right, and I see a massive bid, I see another drop, I see a bid. I can replay those areas to start reading the patterning and the orders that come in from the depth of market, so I can get a better idea of, right, where the buyers come in, where the sellers come in, how the sellers and buyers continue for the move, and replaying these areas, replaying this consistently as days go by, you get a very good understanding of how the DOM actually works. In terms of your eyeballs, are they 90% on the DOM, 5% on the candles, and 5% on the TPO? Thanks. Generally speaking, I do my base case analysis, on the volume profile and the TPOs beforehand, so I know where the levels are. And then I'd say like 95% of the time my eyes are on the DOM as we enter into areas I care about, and then maybe I'll look at the footprint a few percent of the time. I spend 0% of the time looking at candles. I'll spend some time looking at the TPO and volume profile if anything has changed, but it's not that necessary intraday. When I see rebids on pops, do you go long? Yeah, I'll go long where they start bidding. Any last questions? I know it takes a bit of time to type. I understand that. Appreciate it. Thank you, everyone. Thanks for coming out again. Thanks for entertaining me with multiple questions. I hope I helped serve the purpose. Hope you guys have an amazing holiday season. I hope you guys put in effort into learning this DOM on the replay feature. Remember, that's a key. That helped me out a lot. So I hope you all have an amazing long weekend. Have a good time with your families, Thanksgiving, whatnot. And remember, right, short holiday week for the markets. They open up back on Monday. I'm still expecting a little sluggishness maybe to start. Maybe Tuesday, Wednesday, we start actually getting some volume. Keep in mind, we saw that Black Friday at Trade Pro Academy. It's $49 for the first month. Link is in the description. And check out community.tradeproacademy.com for a free Discord if you have any questions that may have not been answered or that you want to get answered. So I'll see you guys soon. Enjoy the weekend. Have a great long weekend, and let me know if you do.